So on that note, I want to talk about, one big symptom of the crypto winter is like there's been a blow up of a number of platforms that I would sort of loosely call crypto shadow banks, where they're sort of taking in short-term demand money from customers and lending it in weird opaque ways. And you have touched in some form probably all of those. You've been a lender, a borrower, a rescuer. So like the natural segue is like, how much of the rescuing activity is about that very long run view of like it is healthier for the crypto ecosystem that you are levered to for depositors not to be constantly blown up?
That's a real part of it. Like, and maybe to make this like more concrete, like the explicit sort of like working principle we had in a number of these was like, it's okay to do a deal that is moderately bad. In bailing out a place. Like the bar was not, this is a good return on investment. The bar is like, this is not that bad of a return on investment, or like we are incinerating a relatively small-ish amount of money in doing this.
And just to tease that out, you're incinerating a small amount of money because like in the long run, you get a large amount of money from the crypto ecosystem being
healthy.
I was going to say healthy, but I almost said popular. Like,
well, I think it's. I think if you want to look at it from just a strictly business case, right? And obviously, if whatever fiscal duty to shareholders to do things that make sense for FTX, you could say, look, it's it being healthy that would cause it to be popular, right? Like ultimately, it's the popularity that would matter, but like that there's a flow through from health there, which is sort of the operative thing. I think there's also just a thing of like, we need to be a good constructive actor in this space. If we're not, it's just like bad on many levels, and ways that we can be. I think will sort of like be a diffuse good that like whatever, we don't need to know beforehand exactly how that pays off.